Want to learn how to buy an investment property or a second home with only the equity you have in your current home? Stick with me, Tom Kalagher with Fairhope Mortgage, and I'll tell you more. You found that perfect beach property or cabin in the mountains. You want to use it as a second home for your family, or you want to rent it out for profit, and you don't have the cash in the bank for a down payment. What can you do? Well, with the way property values have been going up over the last couple of years, you probably already have enough money in your home that you're living in to refinance it, take cash out, and use that money to put towards your second home or investment property. Let's talk quick about what equity is. Equity is the difference between the value of your property and what you owe on it. So let's say your home is worth $400,000, but you have a mortgage for $200,000. 400 minus 200 is 200. You have $200,000 worth of equity in the home. Now, how much of that can you access? You can access up to 80% of your home's value, which means you could refinance and take a value of up to 80% of whatever your home is worth and take that out as equity, have a new mortgage. And the great part is that new mortgage is gonna have a lower rate than what you'll be paying on the investment property or second home loan. Second home and investment properties have higher rates generally by 1 to 2% than a primary residence. So if you're taking money out of your primary, that's going to be at the lower rate of a normal conventional loan instead of an investment property. So what are some of the rules you have to follow when doing this? Well, the first is you're going to end up needing an appraisal most likely. You'll get that appraisal to determine the new value of your current home. You're going to want to make sure you talk to your loan officer about getting pre-approved for the new investment or second home loan, knowing that you're doing the refinance and what the new payment on the refinance is going to be. Because you want to make sure that for both of those loans, your debt to income ratio is under 50%. So if you don't have enough equity at 80%, there's another route you can take. You could do a home equity line of credit for the remaining 10%. Home equity line of credits usually go up to 90% of the value. So you could do a refinance up to 80% and a home equity line of credit for the remaining 10. Most home loans require a 6-month waiting period after getting them before you can refinance. So if you just recently purchased or just recently refinanced, make sure that you check how long it's been and that we're gonna close at least 6 months after that date. If you think it's the right time to invest in that perfect beach property for your family, give me a call, Tom Kalagher, Fairhope Mortgage. Thanks for watching.